Good afternoon and welcome to this presentation of Brick by Brick from Parvis. My name is Françoise Line and I'm the Senior Strategic Advisor. I'd like to say that this content is not intended to provide and or should not be relied on for investment tax. I can't read that, Sally, I'm sorry.
No worries, I can step in here. So this content is not intended to provide and should not be relied on for investment tax, legal, or accounting advice. Nothing in this presentation shall be construed or as a recommendation or offer to sell or solicit of any offer to buy any securities.
Thank you, appreciate that. So who is Parvis? Parvis is a technology-driven real estate investing platform and exempt market dealer. We bring institutional quality real estate investment opportunities to eligible and accredited investors, making the process as simple and as quick as possible. If you'd like more information, please visit parvisinvest.com. So today I'm very happy to be able to welcome Skye McLean, who is the founder and CEO of Basecamp Resorts, and Birol Fisekci, who will be here to present the Wildwood Investment Fund with us. Skye, Birol, the show is yours.
Perfect. Well, first off, thank you so much to everybody attending and watching this as a future recording. We really appreciate the time that everyone's allocating and dedicating to hear about the Wildwood Investment Fund by Basecamp. As Françoise said, my name is Skye Mitchell, and I'm the founder and CEO of Basecamp, and I'm going to walk you through part of our presentation, followed by Birol Fisekci, who's the Chief Strategy Officer at Basecamp. To start off, Basecamp is a real estate developer specializing in assets that deliver impressionable experiences. Our focus is really on that experience, and that dates back to when I was 29 and I first bought a condo in Canmore and said, I'm going to Airbnb this because I had the zoning to do so, and Airbnb on the weekends when I'm skiing and biking. And that is what led to where we are today, which is assets under management of $580 million, starting with that one condo that I told you about. But again, always focused on really bringing people experiences. We're all outdoor enthusiasts and we love to be innovative. And it's really important to note that on top of all of that, we have an amazing board of advisors that helps guide us in our decision-making here at Basecamp.
I think we may have lost Skye due to some technical challenges. Is anyone else on the line?
Scale this concept into a hotel, it would be incredible. And so what I felt was really missing in the market here in Canmore and in other recreation destinations was a brand associated with the Airbnb product, which is what led us to Basecamp Resorts and our home away from home. Since then, as you can see under the May 2018 flag, we've also acquired existing properties, branded them several different brands by Basecamp, such as Lamp House, Basecamp Lodge, Northwinds by Basecamp, and acquired, renovated, built, and operated hotels that's now to the tune of 13 operating hotels. But we're not just a hotelier. We also build and develop and sell condos, such as in the August 2021, it's a property called Skyline Peaks, where we built hotel condos, sold 74 units here in Canmore, and Moose Meadows on the right of the screen, which is actually industrial condos, which is where I'm sitting right now, actually in Canmore at our office above one of the bays. So we really are a real estate developer with a very strong focus on hospitality. This slide shows that we continue to grow despite COVID, which was horrible. And I think it's really important to touch on that just to show that our resilience as an organization. COVID hit like, a train coming a million miles an hour, blew up our office. We had to lay off people. Unfortunately, we had to close the hotels, like everything literally shut down. But despite all of that and the complete uncertainty of the world, we were able to get through that terrible time and continue to grow and have huge growth trajectory ahead of us, as you can see here, with different asset types, as well as now what we're about to talk to you about today, which is our entrance into the spa industry. So the reason for the spa is really going to be touched on by Birol, but I want to tell you a little bit about how I decided about this, and then why this is such a great idea and why this is such an amazing asset class will come from Birol. But we were at Mountain House one day, and Mountain House is a hotel in Canmore. It's a 99-room hotel that used to be a Holiday Inn, and it came with an extra acre and change of land. And where we were thinking, oh, let's build some more hotel rooms. We're really hotel people. We're good at hotels. We run hotels. We make money for our investors. It all made sense. And I've been kind of traveling around and going to different properties and really noticing the focus on experience, particularly since COVID, how it had just been like, this is all about the experience of the guest, more so than ever in my career. We need to build a spa. I had been to all of like 2 Nordic spas, wouldn't call myself a spa goer, but definitely a spa lover, and was like, I can't believe that we're in Canmore, we have no spa. We're building one. And that was as far as I got, and then brought in the professionals who actually know how to develop it, execute it, which Birol will talk about. And in 5 years from now, we aspire to be $1 billion plus in assets under management. So we have a really big growth trajectory ahead of us. So a lot of people say, like, why Basecamp? What makes you different? What is so special at Basecamp? And I like to say there's a lot of things, but these are the key points that really set us apart from everybody else. We have a unique product offering and very advanced revenue management system. So when I started, I had no idea what revenue management was. I was like, hey, let's go set the rates in this hotel and like go skiing. This is going to be great. Well, it doesn't work that way in our industry. Very similar to all other tourism industries. You've probably been like, oh, I'm going to go book a flight. And then 5 minutes later, the flight's like $100 more. That's because there's somebody behind the scenes really watching the supply, the demand, how many people are looking at those flights, and in our case, hotels, and managing the revenue. Sometimes as much as a $3 change in a hotel room rate can drive business to our hotel. It's very sensitive. And we have designed a system that's, like, in my opinion, the best in class. We have innovative marketing. We diversify our risk by being in different asset classes, in different markets, developing different asset classes in those different markets at various times. And we are really strategically expanding into this spa business, again, based on that experience. And again, we're going to get into that shortly. And most importantly, in my opinion, a lot of this success has been driven by our vertical integration. So at the beginning, people were like, well, why don't you hire all these consultants for this and consultants for that? Well, first of all, we didn't have the money to do so. But most importantly, I said, if I'm going to deliver the best returns to my LPs, limited partners, my investors, I need to control everything myself. I can't just hire somebody that I don't know as a consultant and hope that they're going to do what's best for the hotel, what's best for my investors. So that's what started a real estate company, construction company, a hotel management company, and a brand and marketing company. So we do everything for our investors, starting from land acquisition all the way to operating the asset. I think it's really important to take a quick look at this slide and see that we're outperforming, markets all over Canada. And a lot of people will say, yeah, but those are cities, like, who cares? But it does matter, because most people are always like, oh, we only invest in cities. We like large metropolitan areas. Well, hey, look, we're outperforming those large metropolitan areas here at Basecamp Resorts. So it's really important to note that this is due to all the factors that I just mentioned on the previous slide. On this slide, there's a lot of data. And again, this is going to be available to anyone who wants a copy or wants to rewatch the video, because there's a lot of information we're throwing at you. But the key point here is underperformance, noting that we've delivered consistently 20% plus IRR, so your average annual return, at a 1.5 to 3x. And so as an investor, it's critical to know that we've always delivered strong returns to our investors in all of our different asset classes. So this is really a very high-level summary of our operating portfolio, our assets under development, as well as we have other assets that we develop. Like I said, we do residential, hotel condos for sale, residential for development, long-term rentals. And again, the key thing here is to show that we've realized an EBITDA margin of 33% in a very competitive industry where it's hard to realize those type of margins. Now I'm going to turn it over to Birol.
Thank you, Sky. Now, to fully appreciate the potential of this investment, we think it's important to identify some of the macro drivers that underpin the investment thesis for Nordic spas. The Global Wellness Institute is a not-for-profit organization, which is the leading global research and educational resource for the wellness industry. In 2013, the Institute started to quantify the global investment spend in the wellness economy. And based on 11 primary wellness sectors, they determined the total investment in 2013 was 3.4 trillion US dollars globally. By 2024, this investment had grown to become one of the largest global economic contributors at 6.3 trillion US. Now, the Institute predicts that the wellness economy will continue to grow to 9 trillion by 2028, driven by our aging population that has more disposable income. And you combine this with a real strong awareness of the importance of leading a healthy lifestyle. Those are two primary drivers. But we also have the fact that our governments are realizing our current health care model is simply unsustainable. We focus on kind of that sick care model, and then we also have a rise of chronic disease. So hopefully what you're getting out of this is, spending on wellness, it really is no longer a luxury or a discretionary. It's rather essential for maintaining good health, longevity, as well as mental resilience. Now, if we take that 6.3 trillion US dollars per annum, which, when you look at the global aspect, yeah, it's a good number to know. But what's really important here is from a Basecamp perspective, we want to understand what's happening in North America, as well as, of course, and most importantly, Canada. So of the 11 sectors that combined total that 6.3 trillion, Basecamp is focused on three sectors: wellness tourism, spas, and wellness real estate. Now, firstly, North America represents the largest regional wellness economy in the world by far. Not only do we spend more on an aggregate basis, but we spend more on a per capita basis. So again, we have a global 6.3 trillion number, but within that number, the largest market, both on a per capita basis and on a total aggregate basis, is North America. And now when we drill down into what happens in Canada, we have, again, a market that is growing heavily in the tourism sector. We're 14th largest region for growth in expenditures. What's interesting about this is our domestic markets account for 87% of the wellness traveler. Next, our wellness real estate markets. We are the 8th largest global market with 22.7% growth since 2019. Even our spas, globally, we're the 14th largest market. So this is all, quite interesting, but if you take it in the context of the fact that as North Americans, we're considered a very young market from an awareness perspective, especially when we're compared to our European counterparts. Now, all three of these sectors have recovered fully from the pandemic. The Institute predicts those three sectors to continue to lead growth within the Wellness Institute market. Canada will continue to benefit from this growth, both globally and locally. So we're, if you haven't picked up on it, we're pretty excited about the growth potential, both in Canada and North American markets. Now, let's have a little fun and focus a little bit more on spas now. Spas have always been one of the cornerstone to wellness. And while the term wellness is a modern word, it truly has ancient roots. The 6 key tenets to wellness are all rooted in preventative and holistic values. They can be traced all the way back through the millennia to the thermal baths of ancient Egypt. So now I'm going to dive into our market spaces and give you a little bit of background on really what a Nordic spa is, because some of you, I'm sure some of you are familiar, some want a little more information. Now, admittingly, in Canada, we use the term Nordic spa as a bit of a catch-all phrase. I think this is mainly because we are such a young market, and I'm sure over time that we'll see more segmentation. But for now, in principle, a Nordic spa utilizes the thermal cycles of enjoying hot, cold, and rest to purge our bodies of toxins, mentally relax, and revitalize ourselves. At Basecamp, we also place a fourth important factor in this, and that's incorporating a social aspect to this cycle. So in all our resorts, you will definitely see an element of social connection with the people that are enjoying the spas with yourself. Now, Again, just like I've talked globally and drilled into Canada, I also wanted to do the same with spa background. So as I explained earlier, the global markets, the Europeans are by far the most mature market from both an awareness and a facilities perspective. Now, the exciting part for Basecamp is that if Europe is the most mature market, yet North America spend the most on wellness, this suggests we'll see a much deeper adoption across the wellness spectrum in our market as it matures. It also indicates that we are not dealing with a trend or a fad, but rather a growing awareness and shift how we want and need to take care of ourselves. As our market becomes more aware, there will be more demand. Important to note, the European giant Group Therme is already planning a spa in Toronto at Ontario Place. Now, to our knowledge, this is even before considering its entry into the US market space. I think this is a true testament to Canada's spa potential. So from Europe, let's talk about our biggest market. Europeans are definitely the largest adopter of spa culture. Quebec is by far Canada's most mature market. There's over 60 Nordic spas in Quebec alone. Quebec has a rich spa culture, and we're now seeing that starting to spill into other provinces and other market spaces in Canada. We know that Ontario represents the two largest growth markets in Canada, but it's also facing significant hurdles to growth, including Therme's plans at Ontario Place. They've been facing regulatory challenges from the beginning. Now, this is one of the barriers of entry that we're going to get into in a slide in a few slides from now. But it's important to note the challenges around regulatory process. Sorry. So in Canada, let's talk about, we've mentioned that Quebec has over 60 Nordic spas. Now, many of these are small, they're family-owned spas, highly popular. But what we are seeing is emerge are a more sophisticated branding behind a spa culture. And there are three notable Quebec-based companies that have contributed significantly to the Nordic spa business. Now, frankly, they do an exceptional job, and I would encourage you to venture out and experience what they have to offer as well. Now, interestingly, despite the numerous spas in Eastern Canada, we only have one Nordic spa that's in Alberta, nestled in the outdoors. So in Alberta, we represent the third largest market potential in Canada. This is a very important data point because it identifies the potential and the significant growth that is predicted in this sector. Sorry, I've got a fast finger. So I mentioned earlier about the barriers to entry. Now, when people speak to us about spas, they often ask, well, why don't we see more of these given the financial performance that we hear about? The reason is, bluntly, there are big barriers to entry. They range from challenges to finding the right site that's suitable for a spa, and then you require the appropriate regulatory framework. And you'll keep in mind again that Group Therme is seeing that in Ontario now. We also need, in our view, to get past all of this, you have to have a highly experienced design, construction, and operational team. I would argue that this team should always be internal and highly experienced so they can drive the consultants versus the other way around, as Skye mentioned earlier. Finally, all of this requires significant financial resources and a very committed sponsor. Basecamp represents all of this. Our business model has 6 tenets: inclusive wellness, focus on high margin services, build strong customer loyalty by providing exceptional service, be a social place with excellent culinary experiences, and always maintain in-house expertise, and where possible, leverage our existing hospitality offerings to further enhance the experience. So at this point of the presentation, we hope we've identified wellness as one of the largest global economic contributors. We've shown that North America spends more than any other market, and within that context, Canada is expected to see significant and continued growth in wellness tourism, wellness real estate, and spas. Finally, we have also shown that Eastern Canada is maturing as we see more spas get developed. And as this awareness grows, we feel there'll be tremendous potential and pressure for Western Canada to also develop. Now, we believe Basecamp truly is best positioned to address this growth of demand. We have internal expertise. We're going to show you some prime sites, and we have a strong brand recognition and market reach, both national and international travelers coming to our Rocky Mountains. I'll leave you with one final statistics regarding wellness travelers. 83% of these travelers incorporate wellness as a secondary purpose to their travel. In other words, as a tourist travels to the mountains for activities such as skiing, mountain biking, hiking, or simply, enjoying the Rockies, 83% of them will explore a wellness opportunity in addition to their primary purpose of visiting the Rockies. Now, this is important to us because this translates to an exceptionally large pool of potential users. Sky, back over to you.
Thank you, Birol. Now, I hope that everyone realizes in the good way that we put a lot of thought into this. We've done a lot of research. We've hired a lot of professionals. So it's come a long way since me standing on the site saying, let's build a spa. And I'm happy to bring to you today the details on our opportunity. So as I mentioned, Mountain House in Canmore on this slide is the deal where I was standing on the site and came up with this idea. And that's fully funded and under construction and going to be our first spa here in Canmore and our first spa altogether, which leads to the Wildwood Investment Fund, where we're funding all of Fernie, a piece of Harmony, and a piece of Banff in an investment fund. The opportunity is $20 million in limited partnership units. So limited partnership is a really standard mechanism in real estate to invest in real estate. It's what we've used on all of our hotels. Happy to go into more detail later in the Q&A if there's people who are unfamiliar with this, but I'll skip over that for now. And this limited partnership is going to invest, as I said, into those 3 spas. Many people say, why a fund instead of just like picking which one you would like to invest in? Well, back in 2019, we were in a very similar scenario, but with 5 hotels. And we were like, okay, this is really hard to get on the phone with Jack or Susie or Jacob or whoever and say, well, you should invest in this hotel. No, you should invest in that hotel. Because frankly, all of them were great hotels in great locations, in great markets, and at what I thought was a really good time, and it was. So we thought, hey, why not just put them all together and raise $14 million at the time for these 5 hotels rather than 5 different tranches. It's now, 5 years later, 5.5 years later, and all of those hotels have been developed, and we've exceeded our targets on multiple on return for people's equity, as well as the IRR that we predicted. So as an investor, it really exposes you to a variety of different opportunities in different locations and flexibility to act quickly. So as what I mean by that is back in development LP1, there was one hotel that we were planning on developing. It didn't work out. So we were able to take that allocated money and put it towards a different hotel, which was Baker Creek, our hotel in Lake Louise, which has done exceptionally well. So there's flexibility in the fund to make those kind of decisions, which leads us, of course, to a quicker path to realizing the investor returns, which was the case with Development LP1. So all of that said, this is based on a very successful experience with the fund model. So as I mentioned, these are the 3 projects. Fernie is 69 hotel rooms, and the spa, of course, in a great location, just as you enter Fernie on the highway. We're still working on a couple modifications with the hotel room, so it might be a few less hotel rooms, but nonetheless, it's going to be a great, beautiful hotel with a quite large Nordic spa. Harmony is on the west side of Calgary on a 5-acre prime piece of land in the village center of Harmony, and Banff is a beautiful rooftop Nordic spa, very centrally located in Banff. This fund's projected IRR is 27% with an equity multiple of 3.1. I will turn back over to Birol for this slide as he speaks to it quite well.
Thanks, Guy. So by strategically bundling the assets into a fund, we're able to reduce investor risk while enhancing return potential. It's plain and simple. You know, at Basecamp, we're really proud of the fact many of our initial investors still invest with us today, including participating in our completed equity raise of our SPA in Canmore, which Sky mentioned. Now, given our growth plans, we know we need to further expand our network of investors. As such, it was really important for us that this offering be exceptionally compelling. So the Wildwood Investment Fund is designed to be exactly that. We've delevered the planning and regulatory risk in 2 of the projects. We are well advanced in the costing model due to our work at Mountain House. So we really focused on how do we ensure a structure that, you know, I should emphasize all risk into private enterprise can be risky, but we feel we've really addressed pain points of a project in the early days to make sure we're delivering today projects that are, you know, well on their way in the development cycle. And I do get a lot of questions about, well, why is the fund weighted the way it is heavily towards Fernie versus Harmony and Banff? It's plain and simple. Fernie is the fund's workhorse. It has the most certainty with the least amount of risk. It does not require any more equity to be developed once we've done this raise. And when we combine Fernie with Harmony's worst case scenario, we know that the potential to our potential IRR that we're going to be generating is over 23%, even if Banff does not proceed. So what we've really focused on is to make sure that the fund itself creates a very strong return for our investors, regardless of the scenario. Now, when we think of Harmony and Banff, even though it's a small amount, this really is about building relationships with these new investors coming into the fund. With Banff and Harmony for that matter, you will get continued reporting, so you'll be able to track the performance of those projects. We have not, in Harmony or Banff's case, concluded how we're going to complete the raise. So there is the potential for further investment opportunity in those. That it goes into a much deeper conversation. So hopefully we'll see some of those questions in the Q&A period. But what we've really focused on is Fernie being the workhorse, Harmony being a project that is well advanced on the planning stage, and investors in Wildwood are able to come in through what we call the founders group. So you are at the foundational stage of the investment, which is one of the reasons the investment is so secure. And then Banff, transparently, if I had to pick the wild card, Banff still has some planning to go, but we're most excited about it because financial risk to the portfolio is extremely small, but the upside in Banff is extremely high. So it was a natural to put into this fund as well. Now, I think I'll turn it back over to Sky, but in summary, I just wanted to say for us, the Wildwood Investment Fund really is focused on building or continuing to build that suite of investors who enjoy our story and want to stick with us well into the future.
So I'll just speak to this quite quickly, but it's important to see that we obviously don't make any revenue in 2025 or 2026 because we're raising the money right now, and then we're using that money to start construction on these spas. So a small amount of revenue starts in 2027, as the spas wouldn't be open until later in the year, if not into 2028 for some of them. And then in 2029, there's obviously a larger amount of revenue because everything's operating, stabilizing, and then coming into a roll-up, which I'll talk to on a future slide. So the minimum investment for this fund is $50,000, with half of it due now, January 31st, and half of it due in September. The reason for that is that we don't need all the cash all at once right now. So there's no point in all of this money sitting in a bank account when, you know, you could use it for something else, and also takes the edge off as well. So again, this shows that of the 20 million, 10 is due now, 10 is due in September. And then the cash flows into 2029 when we either sell, roll up, or make a decision about the fund. But this is a 5-year trajectory. Again, just a summary of everything: half due now, half September, the 3 locations, the 27% IRR, and 3.1x with a $50,000 minimum. So it's really important to note that, you know, we've thrown so much information at you. So please, I totally am looking forward to question and answer. Ask anything. We're happy to answer anything. But at the bottom of all of this is our philosophy and our value of putting investors first. So it's really important to know that as the general partner, SkyWest Investments, which is my company, we don't make any promotes, which is kind of like a kicker at the end if you've never heard the term promote, until investors have received their returns. They're different in each deal, which is going to come on another slide, but we don't make any of the returns off of profits until the investors have been taken care of. And that's really important. It's also important to note that we, as the sponsor, put our own money into each deal as a limited partner as well. That's critical to know that our interests are aligned, and we believe in this as an investor as well. So, to the exit strategy. What happens in 2029? With our hotels in the past, we've created what's called the Basecamp Investment Fund. What that is we had all these hotels in LP, like I said, limited partnership, different groups of investors. Some people were in all of them. Some people were only in one of them. Some people were in a few of them. We valued all of the hotels, and on January 1st of 2023, so 2 years ago, rolled them all into what's called the Basecamp Investment Fund. And as I mentioned, we had development LP1, and that's now ready to roll into the Basecamp Investment Fund. So we're going to continue to roll assets into this fund. And the most important thing to note about that is if you have $1 now that's worth $3 in 5 years, you get $3 worth of units in the Basecamp Investment Fund, and that is a tax-deferred transaction. So that $2 gain, if you sell it, you obviously pay your respective tax. If you roll it up, it is tax-deferred. So what we've been doing with assets moving forwards is giving people the option. Do you want to roll up? Do you want to be bought out? If there's an opportunity to sell the portfolio of spas, we can look at that as well. And the whole benefit of all of this is that there is flexibility with that, but there is limited flexibility between now and 2029, obviously. And so why now? As Birol said, you know, the spa business is so exciting. It's thrilling. People are seeking these experiences. It's grown tremendously in Europe. It's growing, you know, really quickly in Eastern Canada. Now it's like our time here in Western Canada. So it's a really great time to get into something that is proven in other markets. We're not just reinventing the wheel. This has already been done, proven. The demand is there. The spend is there. The interest is there. But get in early here in Western Canada. So with that, thank you so much for attending the presentation or watching it if you're watching this as a later date. We are open now for any and all questions.
Thank you very much, Sky, and thank you, Birol. And I'd like to encourage all the participants to ask their questions. The Q&A button's at the bottom of your screen, but we do have a first one. So great presentation. They would like to know, what are the securities for the LP investors?
Sorry, what do you mean? Maybe they could elaborate, like securities in terms of.
They said how many years?
Pardon me?
They added how many years? Like, what are the securities for the LP investors? And then they added how many
So
years?
if I understand correctly, the person invests the money this year, the money is in the deal until 2029. Of course, there's been scenarios where people have had family emergencies, certain, you know, life circumstances change. They can phone us. We'll try to find a replacement investor. Maybe we'll buy the units, but it is locked into the deal until 2029. The limited partnership is managed, and the deal is held. It's owned by the limited partners, but through the general partner, which is, like I said, SkyWest Investments.
And if I may, I think that question may lean towards, you know, what is the financial security of the investment? What underpins the investment? So it's important to note we do not have any, you know, external mezzanine financing in any of these capital stacks. We only use construction financing after the equity stack is filled to construct the project. The land in Fernie has been already acquired and is owned by us. We are well advanced into the development permit process. We actually have the deep development permit for the hotel portion. We're now amending that. In Harmony's case, we bought the land far below market, and that is rolled into the fund at acquisition price. We have an appraisal of the land, which clearly shows a very strong enhancement in value. But again, there's no lift that flows straight through to the investor. Banff's, because it's a leased property, it's federally owned, it's in the parks. We have a hotel on site already that has a lease arrangement within the hotel, within the building itself.
Thank you. I have a second question from that participant. Would like to know how much equity percentage the GP is investing alongside the LP.
In each deal, we participate for 10 to 15%. In these deals, it's 10, and that doesn't include that, you know, some of our key executives and other people at Basecamp may choose to participate in the limited partnership, and they have chosen in the past too as well.
Yeah, and again, I can say in both Fernie, Harmony, and well, frankly, Banff, like I said, that's the furthest away from all the boxes that we need to take. It's in the earlier stages of development, but I know internally I could say comfortably that you'll also see executive team members investing in Banff. But certainly we already see that, and it's funded in both Harmony and Fernie.
Next question. January 31st comes very soon. What happens if the 10 million isn't achieved at that date?
Well, we've already raised more than half of the 20, so we are on target to hit the 20 million. So everybody, how it works, maybe I wasn't clear, is we raise the 20. So if you're signing up for 100 grand, 50 is due now, 50 is due later. So it's actually just each person splitting their respective amount in two to take the edge off of the investor. And also because we don't need all the money right away, it doesn't make sense for us to just have it sitting in our bank account. So hopefully that clarifies that, as well as we're well on track. So we're kind of coming in on the closing line here.
And I think what you'll see now, given where we're at in the raise to date, is, you know, we continue and will continue to add value to all three projects. So at some point, we're going to have to reevaluate the effective share price of the investment, which we would see going up.
And it's also important to note, I forgot to say this, which we need to add this in the presentation, Birol, is that we are, as of next week, RSP and TFSA eligible. So that's also really important for anyone who might have some RSPs kicking around.
Next question. What is the management fee for the fund?
So there's different fees. So could they explain which fee they're thinking? Because there's actually no fund management fee in the traditional sense of the fund. We don't charge a management fee.
I think that's what they meant by that question.
Okay.
So
Okay. Yeah. There's no, we don't charge a fee to manage.
Next question. Do we need to be an accredited investor to invest?
No. So to come directly into the LP, you do need to be accredited investor. However, to come in with RSPs and TFSAs, you need to be an eligible investor.
Okay. Maybe is it possible? Oh no, that was answered the other. Perfect. Okay.
And just to add into that, our team can help anyone who's interested in what is the process of you know, registering as an eligible investor through our broker. That's all easy to sort out if people want to get into the specifics.
Yep. Somebody wants to follow up on the registered accounts, wanting to make sure that you mean RSP, TFSA, and LIRA eligible.
Yes, that is correct.
So all registered accounts. Okay.
Yeah.
Excellent. Thank you very much.
Yes.
Somebody wants to know if you can speak to the tax implications if it's a US investor.
Yeah, so we do have American investors, and right now, how it's been set up is really through our lawyers. So if this is the American or the American entity, so Joe Schmo or LLC 1234, that individual or company opens Alberta Company 1234. So that person owns an Alberta company, and then through the Alberta company, they invest into the limited partnership. And we have a steps memo. So, Francoise, maybe what I'll do is get someone to send you, Lee, if you could make a note of this, send you that steps memo and you can share it with everybody.
Perfect. Thank you very much for that. Somebody would like clarification of what you mean by an eligible investor.
So eligible investor is a category similar to accredited investor. I don't have the list in front of me, but it just pertains to annual income, which I believe needs to be 75 grand a year combined annual income, as well as a certain asset value. But there is a tick list. And again, that information we can share as well.
Perfect. Somebody said, you mentioned no returns to management until the investor's preferred rate is reached. How is the preferred rate determined?
I think, Birol, you have a slide about this and you're better at explaining this.
Sure.
There we go.
I think I'm sharing my slides still.
Yeah.
Yes.
Looks good.
Okay. So the obvious question again is, why are there different thresholds for preferred returns? So you can see basically for us, the first two projects are an 8% hurdle rate. So until our investors get 8%, the general partner, Basecamp, gets 0 promote. Then there's a step up between that 8 and 12 in Fernie's case and 8 and 16 preferred return in Calgary in Harmony's case. And again, the promotes are slightly different. Now, the way we set our promotes for Fernie, as I said earlier, it's the workhorse. We wanted to make sure that we're the project that we put forward that's doing the heavy lifting for the fund. We need that to perform, frankly. We take great pride in the fact that every project we've delivered to our investors, there's been a 20% IRR, and we intend on trying to hold that principle when we seek new projects and go into development of new projects. So again, hopefully that explains the Fernie piece. Again, for the Calgary piece, that has a slightly elevated risk profile with it, giving its order of magnitude. And we have the one piece on the Harmony site is the way the structure is working right now is I mentioned the founders acquired the land and have funded or will be funding all the development costs. So it takes the project through to delevering all planning risk. And now we can start construction. That construction piece, it's a $27 million equity raise. So it's significant, and we know that. We have some very interested parties in that piece, but it's a lot of heavy lifting on the general partner side to bring that to fruition. So there is, a slight for us, a slightly stronger promote. Same thing with Banff in that there's a lot of heavy lifting that needs to be done. And we're not sure, between now and execution, there's going to be other parties involved. We may need to have different considerations on how we treat the promote. And the one toggle we can't change is what our LP investors in the fund get. So we've built into both Harmony and Banff some wiggle room that if we need to create some form of financial incentive for those projects, the general partner can do that without impacting our limited partners in the fund. Hence the 3 levels of differences. Hopefully that makes sense.
Thank you. An easier question. Will the spas be child friendly?
Only child allowed is Birol.
Yeah, due to the nature and the governance around the spas, that will be a very difficult thing for us to accomplish. Now, would we have special days? Perhaps that will be decided by the ops team. We do have an in-house expert on ops. And this is the first time I've been asked that question, so I would like to talk to him about it. But I can tell you in principle, For most visitations, it will not be child friendly. We also do intend in our spas to have, for example, alcohol service. So it does add another layer of complexity. So highly unlikely.
But
to
as
be
we evolve,
enforced.
we are going to be looking at child minding services where the spas are going to be big enough to allow for something like that. I have a 4-year-old and a 6-year-old, so I want to be able to come, drop the kids off with someone for a couple hours at the spa, and then pick them up. So we might explore that, especially because I'm like very passionate about that. Given that I have 2 small children, Birol has graduated from this phase of life. And but yeah, it doesn't really work to have like small kids in saunas and steam rooms and they overheat. It's just a liability. It doesn't work.
Next question. Is the annual target IRR 20 or 27%? Assuming a
27.
4-year sorry?
Oh, sorry. Cut
No,
you off.
I thought there was a continuation, but I think it's a second question. Yeah, so is the annual target IRR 20 or 27%?
27.
Okay. Assuming a 4-year project, is it 2 times payout on invested capital?
3.1.
Okay.
Well, assuming 4-year, right? So they're just
Well, it's
we're not
5
a
years.
4-year.
So it's
Yeah.
2025, 26, 27, 28, and 29.
Yeah.
So I did count on my fingers just to be sure, but yeah, it's 5 years.
Interesting question around climate change. Asking if risk management approach for future climate change impact on lower level elevation ski resorts, including water supplies during summer for spas.
It's a great question. A couple of things that factor into that. So let's first take off the actual design of the spa. So our lead spa designer, Antoine, our VP of spas, he has a deep background and experience in spa design. So everything he does with a lens of the environmental impact. So how much electrical use, what is electrical wastage, what is heat wastage in a building, how can we recirculate heat to cool and cool to heat. So it in the design parameters, I would do it an injustice to kind of go into the details. But I would welcome those questions in writing through to our team, and we will get you great answers from Antoine. The next piece on water reuse, there is actually a lot of circulation in spas that we're able to do through treatment within the spa itself. In the case of Harmony, for example, it's on a water and wastewater system that the community, we're also involved existentially in the management of the development of Harmony. And we're very familiar. In fact, one of our team members built the water treatment facility, which is one of the most advanced in North America. So water reuse and water use in the Harmony project in particular is something that's quite close to our hearts. There was one other aspect that they went into. Sorry, there was the climate aspect of energy use. If you can refresh, Francois, my memory on, I'm missing one element of their question, which I wanted to make sure I touched on.
It was low ski hill. I think
Oh, thank you.
elevation for the ski resorts.
Yeah, so important to note that the Nordic spa, it's not tied to the ski. If this is where they're going with this, the ski industry, we're really tied to the Rocky Mountains or the experience of spas. Now, we've designed our spa, so we actually have 2 design parameters. In the case of the Rocky Mountains, we generally, if not always, will attach the spa to one of our hotels. What this does, so right now we have 13 operating hotels. What this does is, particularly during shoulder seasons, where the general market is lower, it's a great destination for local tourism. And as I mentioned, that's 87% of our tourist visits for local tourism to take advantage of a weekend getaway or a midweek kind of runaway with their partner. So we feel that the spas, regardless of the activities that are happening at that time, the spas will be exceptionally popular. So not only filling beds in our hotel, but also the adjacent hotels in the area. So for us, skiing, it's great that you can experience a Nordic spa after a ski visit, but frankly, it doesn't do anything for the model of the financial model for the spa. In Harmony's case, it's a little bit different because that's what you would call a metropolitan spa. So there's some great ones in Quebec, which are in major cities. And the idea there now is, in the evening after work or an hour before work closes, you skim out a little earlier, you can actually break away for 3 or 4 hours and have an incredible experience, revitalize yourself midweek without having to drive an hour and a half to get there or an hour and a half back or have to pay for accommodations to stay somewhere. So that metropolitan spa model, we're seeing, really popular in Europe. Don't even need to say that, but certainly in Canada and Eastern Canada and Quebec, we see that model being very successful. So that's the Harmony model, is that destination spa where you don't need a hotel, but your throughputs rely on the population in the area. And for us, in Harmony's case, you're 20 minutes to downtown Calgary.
We have one last question, two-part. First part, are additional cash calls an option if needed?
Guy, do you want to
Sorry,
take
what
that
was
or
that?
me too?
Yeah, it cut out. What was that?
Is there an option for additional cash calls if you need it?
Like after, you mean after funded?
Yep, I'm assuming.
Yeah, our
Yep.
projects always have an option for a cash call, but not unless like it's like hit the fan. So as an example, let's say something goes wrong at a project. First, we'd go to our lender and say, like, listen, XYZ has gone wrong. Can we increase our loan? And then we would go into say, okay, can, the sponsor, myself, can I fund, if it's, 500 grand as an example, the 500 grand. And then as a last resort, we have the ability in the limited partnership agreement to do a cash call up to 20% of the person's original investment. So if you invest 10 grand, which there's no 10 grand, but I'm just using that as an example, then 20%, $10,000, 2 grand would be cash called. But in our history as Basecamp, we've never had to cash call investors.
Yeah. Important to note on that we have lots of toggles, as Sky just mentioned, before that. That would be a last resort for us.
Okay, perfect.
Yeah, that would be like, I don't even know, because even during COVID, when everything kind of shut down, we definitely pulled on toggles, and I kicked in some money to keep everything going, but it's not something we want to do. It's just there as like an insurance policy.
Second part of this question, and I have another one that just came under the radar, but are LP investors subject to dilution if extra funds are needed?
If extra funds were needed, we could raise additional money, but in the history of time, again, we've never intentionally diluted anybody. But if this happened, we would first go to people that are already in the WIF or in the respective deal. So we would only dilute after everyone's been given the option to participate in a cash call, if we even needed to do that. So we've been really good, but still good questions.
Yeah, actually, it's a great question. Just to add to that, this slide that I've just pulled up, and I think all the viewers know that they have access to the slides. So I'd encourage, obviously, to send that to this particular question. You look at the Fernie Hotel and Spa project status. We've got a Class D construction budget. So if you look at why would a cash call be required or a dilution provision be required, it's really because you either overspent or something catastrophic has happened along the way. When you go through the risk profiles of each project, you'll note that a lot of the risk has already been delevered out of the project. So whether it's cost structure, whether it's acquisition of land, design work. So hopefully that, it's particularly in the case of Fernie, which again is the workhorse for this fund. There is so much certainty that I can't foresee a reasonable, reason why we would need to do a cash call.
Oh,
Oh,
Françoise, you're on mute.
you're on mute.
3 years in and I'm still doing that. So one of our participants was a bit late coming into the presentation and has two quick last questions. The first one, could the investment process of 50% now and 50% later and the timing of each be explained again? Sorry, I joined a bit late.
No problem. So basically the subscription agreement gets filled out with the full amount. So let's just use 100 grand for easy numbers. Then that individual or company or whatever funds 50% now, so $50,000, and then $50,000 in September. So it's the same entity, group, person, but 50% now, 50% later. And then on the screen, you'll see the summary of the deal.
Yeah. And again, I think it's really important to mention to that point, the reason we split the amounts is simply because we don't require the funds all at once. So we're not going to hold cash that we simply don't need to. It gives the time for our investors to hold it in their other vehicles that they have. Coupled with that, I keep mentioning Banff, that does have some regulatory risk for us that we simply may not be able to overcome. And if we can't, one of two things will happen. We are currently assessing other projects. And as Sky said, we may simply slip sheet another project into this fund. And we would only do that, again, if it had parameters similar to our other spas that are in the fund. Or we may, come September, say, you know what, Banff's not a go. We didn't need to spend those funds. We're going to retroactively recalculate it, and we're not going to call that cash into the project, which again underpins the IRR projections because we don't bring the funds in.
That wraps it up. Thank you very much, Birol. Thank you very much, Sky. That was very interesting. For the participants, I'd like to let you know that we will be following up with an email with the link for this presentation and also the coordinates of one of our dealer representatives should you wish to reach out and get more information about the opportunities. So I hope everybody appreciated this and I wish everybody a great evening. Thank you very much.
Thank you, everyone.
Thank you.